Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to take a look at the next 3 weeks of what's expected to be a heavy earnings period. It's also going to give us some more information besides just what we're hearing on the macro level. Phil, it's great to see you as always. Welcome back to Trade Talks. In the next 3 weeks, it's going to be a sprint for many analysts.
It's going to be busy, yeah. A lot of the large cap companies report their earnings for Q2, and so we're going to find a lot about margins, revenue numbers, and which sectors have been profitable and which ones haven't been.
So I think the key is we're in earnings recession right now. We expect some earnings weakness, but this could potentially be the bottom of that.
Yeah, so it is actually expected to be quite a weak earnings season. We've had a huge amount of margin expansion as we recovered from COVID, lots of profit growth. The last 3 quarters, we've actually seen earnings contraction. And so this is meant to be one of the biggest contractions if we look at the forecast at the moment. But to your point, once we get through this quarter, the analysts that are looking forward for future earnings actually see things turning around and see next year back to earnings growth.
How do earnings revisions play into this?
So that's really interesting because analysts seem to get nervous ahead of every earnings season and they wind their forecast back. And then you get the earnings data, and about 70% of companies beat earnings. And so the analysts realize they were a bit too conservative and the forecasts come back up. So you definitely see like a seasonality ahead of earnings, out of earnings. What's interesting looking at like the last 3 quarters that we just talked about being an earnings recession, analysts wound their forecast back much more than normal. Where we're at this quarter though, they're pretty much in line with average. So there's a couple of reasons to be more positive, even though the earnings are meant to be bad this quarter. The analysts aren't as nervous winding their forecast back, and we should expect for some companies to beat and the usual bounce back as well.
Well, I mean, think about the tech sector in particular. Valuations and multiples, we're going to have to be able to justify that through the earnings prints and guidance that we see, because this really has been the market climbing a wall of multiples, basically.
Yeah, although in reality, like a couple of quarters ago, the energy sector was holding the whole market up in terms of earnings. Now the energy sector is actually holding the market down because of the fact that oil prices have come down so much. So there is some real companies with real earnings that are sort of seeing margin compression. We're not actually seeing top line sales dropping yet. We see the really strong retail sales still pushing forward. Inflation is getting built into prices, so per unit might be falling. But what's really happening on the profit side is costs are going up for companies, and so their margins are getting a bit squeezed. And that's really what's causing the little earnings recession right now.
So besides that, if their margins are getting squeezed, even if inflation comes down, that doesn't necessarily mean that the consumer will get a price break. I mean, would they voluntarily take prices down unless competitors are taking prices
You're right. It's all going to have to be about competition. And
right.
So on the good news front, the inflation of the products coming into companies has gone all the way back down pretty much to zero if you look at the averages. Now there's inventories have built up, and so companies have surplus inventories. That's when we start to see discounting, and that is maybe going to help pull down the top line sales numbers, but to our benefit, pull down some prices as well as we get some discounting on products.
Let's hope so, because I feel like the supermarket is as expensive as it ever has been, Phil. All right, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.